Martin Marietta, Hoya Saxa. Georgetown University chants Hoya Saxa at its sporting events, which is Greek and Latin for what rocks, as in what rocks our players are. So after Martin Marietta reported yesterday, shareholders might be saying, Martin Marietta, Hoya Saxa. Martin Marietta reported a great quarter and guided for strong construction demand going forward. We added Martin Marietta to the Daily Double portfolio on January 14th as we think it will double in time, and it is already up more than 30%. Here is why we like it. Martin Marietta is a producer of aggregates and heavy building materials like crushed stone, sand, and gravel. It owns over 300 quarries in 32 U.S. states, and its products are used in the construction of roads, sidewalks, foundations, and infrastructure. The three things we like best about Martin Marietta are: 1. Local monopolies. Extracting large amounts of rock and crushing it into powder is loud, dusty, explosive, property value lowering business. Getting a permit for a new quarry is very difficult, and if there already is a working quarry in the area, you can forget it. Regulatory and permitting barriers to entry work extremely well for the already established quarries like the over 300 owned by Martin Marietta. 2. High weight to cost ratio. Rock and sand aggregates are very cheap by weight, and you can't send them through pipelines. This makes transporting aggregates long distances uneconomical and gives pricing power to the local players. Martin Marietta makes good margins by having irreplaceable local assets. Scale. 3. Scale. The past 6 years, the U.S. economy has been pulling itself out of a recession. Martin Marietta kept a clean balance sheet during the recession and used the downturn to acquire quarries in Texas, California, Colorado, and the Midwest. Martin Marietta centralizes back office services for these properties and saves on costs. This scale makes for better margins. Additionally, if there ever is an infrastructure spending bill, which both sides of the political aisle seem to agree on but have yet to pass, Martin Marietta would likely soar if that bill passed. Martin Marietta has had a nice little run, but we think it is just the beginning of a long-term story. With its entrenched advantages and barriers to entry, construction in America basically needs Martin Marietta. If the U.S. stays healthy, then Martin Marietta should be able to compound for years and decades, and if there is another downturn, the rocks will wait for the economy to pick up.